Hello, I'm Donna Sawyer from the Finance News Network, and joining me from Antares Capital to discuss the launch of their income fund is investment manager Ken Hyman. Ken, welcome back to FNN.
Hi Donna, and it's great to be here.
Investors are facing increasing challenges as they seek higher returns amid falling cash rates. Tell me about the Antares Income Fund and what does it offer to investors?
Well, investors are seeing lower cash rates and much tighter term deposit margins. As an example, an investor who invested in a 12-month term deposit a year ago at 4.6% will be reinvesting now at 3.4% for another 12 months. Antares have been managing income products for the last 20 years, and we think now is the right time to introduce an income product to the retail market. We are targeting returns better than term deposit rates. We're targeting ample liquidity, so we're looking for investors to be able to redeem within 24 hours, regular and stable distributions on a quarterly basis, and capital preservation.
What is the size of your fund and what is your benchmark?
So the initial size is $50 million. The benchmark is the UBS Bank Bill Index, which we plan to outperform by over 1%.
So how do you identify investments that will deliver bankable returns?
At Antares, we target safe yield. Over time, we've developed analytical processes and models that highlight return per unit of risk. We expect to generate yields equal to our peer group for about 2/3 of the risk that they carry in their portfolios.
One of the big concerns for investors, particularly those nearing retirement, is risk. What are some of the key risks that they are facing and how does Antares mitigate those?
We think the two key risks are redeeming the investments when the investors need the money and safeguarding the capital value of those investments. At Antares, we take a lot of pride in the fact that through the GFC, we maintained liquidity for all investors. We met all the redemptions when they came in, and we preserved capital values during that period. In fact, these two risks are in the DNA of Antares, and they are key features of the new income product that we're introducing.
So what are the main risks you are considering right now and how are you managing those risks?
The flood of cheap money that has flowed from the quantitative easing in the US has resulted in a search for yield, and it has driven credit spreads to what we believe are some of the tighter levels experienced over the recent past. Now, Antares' top-down scenario process is looking for some pretty decent global growth over the next 1 to 3 years. So we're looking for companies to do quite well, and we believe that credit will behave reasonably well. However, the cheap money has forced the pricing in credit to what we believe are expensive levels. And to mitigate the risk of a backup in credit spreads, Antares has shortened the credit exposure of its portfolio.
Give me an idea of the type of investor this fund is suitable for.
Typically, you'll be an investor at or approaching retirement, targeting steady returns, liquidity, and security.
What are the key benefits of the fund for investors?
I think the 4 key benefits are earning better returns than term deposits, regular, steady income, liquidity when it's required, and capital preservation.
Finally, Ken, how do investors get exposure to Antares Income Fund?
It's available for investors through MLC Wrap or directly through Antares.
Ken Hyman, thanks for the introduction to Antares Income Fund.
It's been a pleasure.